Rohit Srivastava is here with us. We have been talking to Rohit also for about a month regarding this, and what would it make the market even healthier? Because one was getting, if I am a positional trader, Rohit, and I've been riding the market for a few months now, however much compulsive trader I am on the long side, suppose, one was getting completely exhausted on any fresh long ideas because everything seemed to have gone up. So, if a cut actually happens, will it make markets healthier? And how severe could it be in your view? Just a shallow cut, or could it get deeper?
Yeah, so it's an interesting question because if you think of yourself either as a positional trader or investor, you hope to buy at much lower levels. But if you're holding on to a position, is this cut really going to change the overall direction of things? Apart from when you have big gains on the table, probably a lot of stops get triggered on a day like this where you're trailing your levels and then you get a re-entry at a different price level. The question really is, are you going to go either into a long consolidation or a deep direction? I think neither of those right now yet. Very, very clearly, all that has happened is that you've broken the 20-day average both on the Nifty and Bank Nifty, which gives us another 1 to 3% kind of downside. So say around 19,430 or 19,300 on the Nifty, and say 44,800 or worst case 44,550 on Bank Nifty. So those are the levels up to which we are looking at some downside. But we look at this as a opportunity to create fresh trades. And it's likely to be, a fall to 19,430 or something would be broadly called shallow, although from the high of 19,990, you may say, okay, it's like 3-4% or something. But that's fair. I think after what's been almost a one-way run in July, you get a slight pullback right at the start of August will only set us up for the next move higher, is how I'm thinking about this. So let it be. It might just be a 1-2 day bump up because, usually news-driven action by the market, you see the reaction usually occur in 1 to 2 days mostly, what we've seen in the recent past. And so within 2 days, it gets discounted. So I give it till tomorrow at the most. After that, I think things will start slowly picking up all over again.
Okay, let me talk to you about two areas of the market before Vinny comes down to your preferences in this market, what kind of trade. Two bombed areas on the market. One is IT. Nobody wanted to touch. Brief sparks, but overall it is sidelined like how. Would you find some ideas there after the kind of clawback? And the other is even some of the auto names which are taking big knocks. Would you attempt to buy them on declines, say Hero or some others?
So autos are, I think, no-brainer because it's been a performing sector. The numbers continue to show the momentum has actually been there. So when we talk about chasing performance or chasing momentum, we immediately go to sectors that have been performing and their autos will show up. And so the auto sector is a very clear winner there and will continue to be so, I guess. The IT sector is slightly more difficult when you try to think of on two fronts. One is performance and one is relative performance. Performance for sure, because when you have a bull run in the market like the one we are seeing, you cannot have one sector fall considerably unless something is fundamentally changed. If the market is running up, it is basing itself on some economic improvement that may happen over in the coming months. So eventually the drawdown that we have seen in the IT sector should be a passing phase for them. The real question is, if it is so, and prices for IT stocks do go up as they've been attempting to, will it really outperform the rest of the market? I think that's been the tougher call. And there, I think the easy call is that, go with the mid caps that are doing much better, the mid cap IT names rather than the large cap IT. That's been the easy answer. Will the large cap players also do something that will put them back on a high growth trajectory? I don't know, but keep your eye on it, eye out for it, because if overall IT stocks are performing globally, then you can't have the domestic IT sector stay under a black cloud forever. So that's the approach. Keep your eye there. Focus on the mid cap IT, but let's see what happens. Things may change as things continue to improve.
Right, Rohit, focus on the mid-cap IT is also what you're saying, but I want to also understand in terms of overall the mid-cap space, is there something more exciting that you would look at other than the IT? Anything interesting in terms of names that you would pick out right now in the current market to buy and on the dips that we would see?
So the approach really is to scan, like I said earlier, we scan performance. We look at what is really done well in the recent past, and based on that, we actually like to look at where to go. So if I actually take the 1 month performance of the Nifty Midcap 100, say for example, what do I see on top of that list? Stocks that have gained more than 5% in the Nifty Midcap 100. There are almost 2 dozen stocks there, I think. And what we see on top of that list, I mean, I'm putting out some names. This is not advice. This is based on what our Strike software is really showing us, which is names like Polycab, Z, Union Bank, IRFC, IPCA Labs, and REC. These are probably the top 5 showing up there. Now, when you see overall, you go to the second and third line, you'll see a bit of the power related stocks. Okay, you'll see a bit of the PSU banking stocks. And so that sort of gives you some sectoral insight as well as to where the money is really going. And I see a bit of pharma. So pharma, even though it looked like it is underperforming, just the way we think of IT, it has actually done pretty well in this quarter, picking up from the March lows. So the pharma sector definitely attracted a lot of attention.
Rohit, also, Pharma, how is that looking like? Do you think that defensive play will come in and work out more for Pharma as well?
So there's a clear pickup in the pharma stocks because some of them had really been beaten down, losing 70-80% of their gains post that COVID rally that we saw. There are others that simply consolidated. So I think we went through a long underperformance phase for the pharma sector through 2021 and 2022, and that seems to have ended. It is getting defensive money back because you have a valuation, right? You just like you saw money going into growth versus value into PSU stocks. Now, I think you're seeing something similar starting to happen in healthcare, not just in India. You're hearing people talking about the healthcare sector, even in the US. And so a lot of money is getting allocated in places outside of the US tech. And I think that is creating, demand for pharma stocks in general.
Okay, Rohit, thank you so much for joining in with us this afternoon on ET Now, and as always, giving us an understanding on the markets as well as what stocks are looking interesting as well.